All right, good morning everybody, and welcome to another session here on Facebook Live. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Good morning, Hang, Brad. Hopefully you guys are doing well. If you guys can hear me out there, just let me know where you're tuning in from. Say hi. This is an open forum where everybody can chat, chime in, talk to one another, talk to me, ask me questions, all of that. I see a few people already tuning in. Awesome. Thank you guys. Thank you all for your support. Glad you all could be here this morning. Today we've got, an interesting topic where we're going to be looking at the main influence that drives stock prices. And I'm not going to get into it quite yet. If you've been here for a while, you probably know where I'm going to be heading with this. But going to be talking about that, showing you guys how easy it is to find those kind of stocks that have that long-term potential, that great consistent moves higher that you're looking for, and all in between there. So if you're new here, just tuning in, let me know. But typically, just to give you a little idea of what we do, is we start off taking a look at what's going on today. After that, we then dive into our topic, and then from that point, we save the personal fan favorite till the very end, where we'll show you how to analyze your own stocks in less than 20 seconds. So if you're not already a subscriber, you're not already signed up, stick around at the very end. You will be able to see how fast and easy VectorVest can make analyzing any stock out there. So make sure to stick around for that. Rodria, new guy here, welcome. Glad you could be here. So as always, if you guys enjoy these sessions, don't forget, hit that like button, hit that share button. All that helps me out. Also, if you don't already like the VectorVest Facebook page and turned on notifications, make sure to do that. That way you stay up to date with every stream that we have coming up, and you never miss out on any great information there. All right, so welcome all. Hopefully you guys are doing well. Hopefully everybody's having a good day. This little bit of time that we're going to have here today, we're going to stay away from politics. So if you're tired of hearing about politics like we've been hearing about for the last few months now, this is going to be a great place because we're not going to make one single comment on politics here today. Nothing about the elections. So this can be a good area for everybody just to relax, take a deep breath, get your minds off things that are in the headlines right now. All right, so with that, let's go ahead, jump right into it, take a look at what's going on. As we can see right now, the market is 3 ticks into the green, therefore the color guard is bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. As always, we always have this saying that the first green light after a confirmed down situation is one of the earliest signs that the market's starting to reverse course and head higher. And if we scroll down to the color guard, we can see we do actually have that first green light in the price column since the confirmed down signal, telling us that, we may be seeing the market turning around. We may be seeing a good opportunity here. But looking at the color guard though, we look at the RT. RT is the short-term price trend of the overall market. It's going to be cast on a scale of 0 to 2. So above 1, short-term trend is up, which is good. Below 1, short-term trend would be down, which would be bad. The next is the buy to sell ratio, which is looking at the number of buy-rated stocks compared to the number of sell-rated stocks in a database. This gives us a great picture on the overall health of the market. So above 1 tells us there's more buys than sells in a database, or that there's overall market strength, which is what you want to see on a day that you'd be buying stocks. After that, we then get the MTI, which is looking at the underlying trend of the market. Once again, this is going to be on a scaling of 0 to 2. And as we can see, it's had a big jump here today, up from below 1 to above 1, but also well above 1 here as well, telling us that, we're really seeing a big push higher here. After that, we then get the trend column, which is going to show 2 parts of the trend each and every day. The first part is looking at simply the weekly trend of the market. And as we can see, it's up since we're higher on a week over week basis. Second part is looking at the underlying trend of that MTI. Since the MTI is finally back above 1, underlying trend of the market now up. And then finally, for our last column, we get the calls column, which stands for our confirmed calls. This is our most conservative signal we have here at VectorVest. It's going to be our last signal we get in and our last signal we get to get out. As you can see, we still remain in a down signal with that, but as I stated a few moments ago, The first green light after we get that confirmed down signal is usually the earliest sign that we notice the market starting to reverse course and could be a good opportunity for more aggressive investors to start trickling back in. If we scroll down, take a look at the advanced declines, as always, we like to see a 2-to-1 bias with this when we look at it. Right now, we can see 74% of stocks moving higher today and only 14% of stocks moving lower. So clearly meeting those guidelines that we like to see, telling us that, if you do buy into a stock today, the probabilities that it's going to be moving higher and continuing with the market are very, very good and very good for, they're better for your favor as well. So we see everything's looking pretty good here. We got the MTI jumping. We got the first green light in the price column. RT's finally crossed above 1. Major indices, Dow's up over 2%. NASDAQ's up well over 2%, same as the S&P. So all the major indices are up 2% or greater here today. Definitely what you want to see. So yeah, looks pretty good so far. All right. As always, though, I do like to mention, if you're not already a VectorVest subscriber or you're just getting started with it, as always, the daily color guard report that you can find here in the app will show you and cover all this information on a nightly basis. So if you're new and you haven't watched a daily color guard report, I strongly urge you to do so. It'll greatly improve your investing and keep you up to date with what's going on in the market, what news you need to be aware of for the next day, and everything that could possibly help you make smarter decisions in the market can be found there in that daily color guard report. So with that, let's go ahead, jump into our topic today. So as you guys probably noticed, the title of today is going to be the engine that drives stock prices higher. Well, we have consistently said it time and time again, and we'll continue to say it as we go on, but earnings is going to be the engine that drives stock prices higher over time. If a company has good earnings, or if a company is growing their earnings quarter over quarter, year over year, that means the stock is making money, the company is making money, and people want to buy stocks that make money. I always give this question out whenever I'm doing, a presentation or when I'm live at a seminar. But if you buy, or if a buddy of yours came up to you or a friend of yours came up to you and said, hey, I've got a good company that, we're just struggling right now. We have barely any sales, but people really like it though. We've got a good product. We're actually losing money in the hole a little bit. Can I borrow some money for you to keep the business going? Your answer is most likely going to be, maybe, but probably not. Now, on the other hand, if you have another friend come up to you and say, hey, I've got a company I just started. We're booming right now. We've got so many sales that I can't keep up. I need to expand. Can you loan me some money so that way I can continue to expand my business to keep up with the demand I'm facing? You're going to say, yeah, okay, I like that. That sounds like a good proposition. You see the potential there. You see that the guy's making money. He's selling a product that people are enjoying. You're most likely going to invest in that kind of a stock or that kind of a company or that friend in this example. So that's what earnings really tells. It tells you, is the company good? Is, people buying their products? Are they growing? Are they, continuing to stay ahead of the game, if you will? And earnings can tell us exactly that. So that's what we're going to be focused on here today. And I'll show you here in a little bit how easy it can be to find stocks that have phenomenal earnings and expected to continue to have phenomenal earnings going forward as well. As we get into earnings here today, VectorVest earnings are going to be a little bit different than what you typically see if you go look at Yahoo Finance or just read their financial reports. That's because the earnings that VectorVest shows is not just a historical earnings report, but it's also looking at a forecasted 12 months down the road earnings per share as well, based off some of the major analysts out there in the market. So let's go ahead, take a look at a few stocks. I saw somebody already chime in with Peloton. We'll use that as our example to take a look. I'll show you guys how you can set your graph up to get that as well. But then I'll show you how easy VectorVest can make finding these stocks. So with that, let's go ahead, jump right into it. I'll use the magnifying glass in the upper right and type in Peloton because I'm not sure what the ticker symbol is, but that's okay. VectorVest Stock Advisory app can also look it up by the company's name as well. So you don't have to remember the ticker symbol for all your stocks. So you see PTON, tap on the graph, And as you can see, I have a default graph set up here right now with just price at the top. Oh, you have price at the top, and then you have, let me see here, 1 second. There we go. My cord is getting a little old. I may need to get a new cord. Give me 1 second here. There we go. Almost there. So there we go. Perfect. So getting back into it. Sorry about that, folks. As you can see, I've got the rating bar at the top, price shown in candlesticks, but I'm going to show you guys how you can set up your graph from this screen. So at the bottom, you have graph settings. We'll tap on that. And then as always, you have the different range you can set up, the different frequencies you can set up. You have extended hours, chart types. You can do moving averages, envelopes, support resistance. We're going to go to the lower indicator for right now and choose earnings per share. So now, because they're so new, I don't think they have any earnings data quite out yet. So this may not be a great example. Let's find another stock that is a good example. Let's go Apple, for example. So we just rotate the device sideways, switch it over. There we go. And now you can see the price of the stock at the top, and then below that, you get the nice earnings per share that we're looking for. So with earnings, there's one key pattern to look for, and that's a steadily rising earnings from bottom left to upper right, like a stair-step pattern. That's all you have to really remember with the earnings. You know, it's not about a specific number or a estimate or forecast or anything like that. It's simply looking at the earnings per share number here and looking for a certain pattern. If you can identify just a nice steady rise like we see here with Apple, you can be extremely successful, especially in long-term investing, and earnings is going to be your guide to help you find those stocks that will continue to make money. Now, as always, with any stock, there may be some short-term pullbacks or some sell-offs that occur when the overall market is overbought, those types of situations. But for long-term, earnings is going to be the drive that pushes the stock higher over time. Now, when you see a stock that has phenomenal earnings like we do with Apple, you see it's been pulling back a little bit, it's off of its highs. This is the time, or these are the kind of opportunities that you look for to buy into really good stocks that just may be beaten up or, pulled back a little bit, be able to buy them at a little bit of a discount, if you will. And who doesn't like getting a good bargain? I know I certainly do. So looking at earnings here, we see a really nice rise in earnings over the last year. If you go to the 5-year at the top, once again, same situation. You have a really nice look in price from bottom left to upper right, and the earnings just consistently rising as well. This is exactly what you want to see if you're looking for a stock that you can buy, hold on to for a little bit, and can expect it to continue to go up over time and feel more confident about the stocks that you get into. So we see that Apple looks phenomenal. Been pulling back a little bit, could be a good buying opportunity, especially with the green lights we're noticing today. We see earnings steadily rising. This is a great idea to look at for positioning yourself for stocks that you're not having to get in and out of constantly, or trading back and forth, or giving yourself a lot of headache. If you're somebody who's working throughout the day, you're too busy to be able to watch stocks constantly like a hawk. Looking at earnings can greatly reduce your time and help you figure out, what stocks would be good and how to reduce that worry that you can have. But yeah, so earnings, if you're at work, is a great indicator to look at and will help you significantly reduce the time it takes to find good stocks, and also give you a peace of mind knowing that the stock is making money, the company's making money, and that they're also expected to make money going down the road 12 months at least. This is something unique here at VectorVest that you're not going to be able to find anywhere else with our earnings, and it can greatly improve your success rate when looking at stocks and looking for winning candidates. DDM's on track. Dow is at 35, now 48. Awesome. Way to go there, Sam. So yeah, if you guys use earnings and you guys haven't already, hit that like button, make sure to do so. I see a lot of new faces in here, a lot of new people in here. Don't forget, hit that like button, hit that share button. All that helps me out. All right, so selfless plug in. Let's go ahead, jump back into the app. And now, as I mentioned earlier, VectorVest makes it easier than ever and easier than anywhere else out there to find the stocks that have consistent good earnings. And we've talked about this indicator a lot, but RS, the relative safety. So let's go ahead, jump into the pick section first and foremost. And we'll go to the safest stocks, and safest is referring to the RS indicator. And we'll use the very top stock, CRM, and we'll go down and go to the stock analysis report. And we scroll down till we get to the RS. And as we can see, RS is an indicator of risk. It's cast on a scale of 0 to 2. As always with most of our indicators, above 1 is good, below 1 is bad. And RS is computed from the analysis of the consistency and the predictability of a company's financial performance, debt to equity ratios, sales volume, business longevity, price volatility, and a few other things. But overall, the easiest way to remember earnings or relative safety is if a company is consistently growing their earnings quarter over quarter, year over year, and has that track record to be doing so for the last 1 year, 5 years, 10 years, 15, 20, 25 years, that is going to increase the RS rating. So looking for stocks with a solid RS rating can significantly cut down the time it takes to find these stocks that will go up over time, that find companies that consistently make money, and that, will eventually drive that price higher over time as well. All right, so we've got that. Let's go ahead, take a look at some of these stocks that we have here. CRM, we look at the analysis, poor long-term potential, but phenomenal earnings. Really solid RS, 1.49, probably the highest in the database right now if I were to guess. But, you're looking for less long-term potential, but more consistency with this one. And as we've been talking about for the last year or so, stocks that have really good earnings, really strong fundamentals have been some of the best performers. So even though they're not necessarily are typically known as some of the growth stocks that you've been used to over the years, we've seen phenomenal growth in these stocks because people are worried about, all the situations we've gone over in the last year, and they're worried about, what companies they're positioned in, and they're positioning themselves into these safer stocks because they know they have less risk and these companies are making money. So these are clear winners throughout the last year plus that we've seen here. So after the safety, we then get the timing. Now, once you get into the stock, as I've mentioned in the past, timing is the most important aspect of a stock that you need to be aware of once you actually own a stock. 1.39 tells us it's in a really nice steady uptrend, looks good. You have phenomenal earnings, tells us the company is making money and expected to continue to make money. So overall, yeah, this stock looks really good. It's up 3 1/3% right now here today. We take a look at the graph. I'll just rotate it here. Nice steady rise in price from bottom left to upper right. Earnings, same situation. Nice steady rise from bottom left to upper right. Now you do see where it went sideways for a little bit, but overall, over the course of the last year, if you connected the dots from left to right, it's a nice steady rise, and that's exactly what you want to see. Let's see, Demetrius, how you doing? OIIM has been on fire. I got into 325, bought more every time it went up, a quarter to 475. Ooh, not bad there, Demetrius. Well done. Great trade. I like hearing about those. I like hearing about, bad trades as well because people can learn from them, but it's awesome hearing about you guys making money, especially, through trading, because that's really what we want everybody to be doing. We want people to be trading or investing so that way you can become financially independent through, the use of the stock market here. All right, so CRM, phenomenal look. Let's go take a look at the next one. ALGN, we've talked about this stock a lot over the last few weeks. I know a lot of you guys have been requesting this stock when we analyze your own. But this one, poor long-term potential, no surprise there. When, this is the risk to reward ratio, if you will. Low risk equals lower reward. But you can see the RS 1.46, phenomenal. Timing 1.78, really strong uptrend as well. So yeah, this stock not only has really good earnings, this stock is not only making money, expected to continue to make money, but it's in a really nice uptrend as well currently. All right, TRX, same situation, but this one actually has good long-term potential as well. So you're taking a little bit off of the RS, not much, but a little bit, but getting more for long-term potential or the RV. You have a really nice steady uptrend with an RT of 1.28. So yeah, this stock is definitely a favorable candidate. Looking at the graph real quick, really nice rise in price. Earnings steadily moving higher. You're seeing a big push in earnings here just recently. A new update must be coming out, but yeah, that's exactly what you want to see for a winning candidate. Go to the next one, Adobe. Same situation. Great looking price, great looking earnings. CSP or GP, same situation. A little bit more volatile. Seems to have a few more swings here or there, but overall, great winner. Lulu, been a great winner for years now. If you didn't know about this stock, yeah, it's been a phenomenal winner for a long time. ABMD, earnings a little bit inconsistent. Definitely seen some better ones, but could be an opportunity at some point. Should you consider average RS2? Doris, what do you mean by average RS? Doris, what do you mean by average RSO? Deshaun, hey, if you can find my phone number, Deshaun, you can give me a call anytime. All right. Let's see. Not like my RKT long play at 20. Wait, we can definitely take a look for that. Just give me a few minutes. We'll get into analyzing your stocks in a few. But yeah, we'll take a look at your RKT trade and see what comes up out of there. What are some great buys today? Miguel, these stocks are some great buys. It really, it's a very vague question. It depends on your investment style. There's a lot of different videos that we've done over the last year or so talking about different types of stocks specifically for different styles of investors. So if you're interested, I definitely recommend go to our live section on our Facebook page. Go through some of those, our archives there you can find depending on your investment style and show you exactly where to find the stocks that would be good for you to buy today. Awesome. All right, so I see a lot of people requesting stocks to buy, a lot of stocks to look at. So you guys get the idea. If you're looking for long-term holdings, the main point of today is if you're looking for stocks that, more of your core holdings or stocks that you can add to your portfolio that you want to take a look at or you want to just, buy, hold on to for a while, and not really manage too much, these are the kind of stocks to do so. These are the kind of stocks that, the majority of your portfolio should be in because these are the kind of stocks that you can buy, hold on to for a year, 2 years, 5 years, however much it may be, and know with confidence that these stocks will continue to grow over time. Even though there may be some temporary pullbacks from time to time, like there always is, these are the kind of stocks that can, give you that good night's sleep feel, if you will. All right, some other options, top dividend stocks as well. Once again, you're going to be giving up some of that long-term potential to capture that dividend, capture some of that safety, but those could be great opportunities as well. But really, the retirement stocks are going to be your main focus. If you're looking for, stocks to add to your core holdings, look no further than safest stocks. If you really wanted to, you could get into the more section, go to the premium watch list, and you could get safest stocks with buy ratings. Just to give a little bit more consistency here. So not only are these stocks the highest RS ratings, but also have that buy rating as well, just to give a little bit more confirmation. But once again, CRM takes the number one spot. DR Horton, Facebook, Old Dominion, CDNS, EPAM, Monster Beverage, all of those stocks can be found here. So this is just a little bit more of a filter on top of what we've already looked at, but could help you find stocks that are not only the safest stocks, but also have, everything you're looking for in a stock right away. All right. On the VectorVest app, it states some stocks have below average safety. So that means, Doris, when you see a stock that has below average safety, that means the RS rating is below 1, and that tells us that there is more risk associated with that stock compared to the average stock out there. Now, if you're aggressive or speculative or somebody who is okay with taking on a lot of risk, then looking at stocks with a RS rating below 1 is okay. Those are going to be your more temporary swing traders, day traders, pattern day traders, whatever you want to call them. Those are going to be those types of stocks that they typically look at or that they're willing to look at. If you're somebody who's not, glued to your computer trading for a living or, like to dabble in day trades or really aggressive trades, then stick with stocks that have an RS rating above 1. Hopefully that answers your question and covers that fairly well for you. DL, we talked about the day trades, I believe it was last week or the week before, so go check out those previous videos we have on our Facebook page under the live section, and you can get those. All right, so with that, let's go ahead. What we'll start to do is get into our fan favorite here today. If you guys enjoyed this session, if you learned something new, as always, help me out, helps you guys out. Hit that like button, hit that share button at the bottom here. All of that tells me you guys are enjoying these streams and continues to grow our group because, not only do you hopefully learn a lot from these sessions every week, but I learn from you guys what you want to see, and that all goes into our development process and makes the app the most comprehensive tool out there for you, the user. All right, so with that, let's go ahead, jump right into it, and start to take a look at your guys' stocks. Let's see, JKS. I saw a lot of people asking about that. So JKS we'll start off with. Jinko Solar. Man, it's crazy how much just a day can go, or a day can change a stock. This stock was down significantly yesterday at the open actually, I'm not going to say that word. Not going to say that word here today. But this stock was down significantly along with a lot of clean energy stocks yesterday. And now, just in a matter of 24 hours, it's completely reversed course and now up over 21%. So huge winner here. But great long-term potential, about average risk involved with this stock. Really nice, strong uptrend. So yeah, stock's definitely favorable currently. If we take a look at it and apply what we've learned here today, we can see not only is price rising rapidly here, but looking at earnings are steadily rising over the last year as well, telling us that not only has this company been making money, but looks like they're expected to continue to make money 12 months down the road, which is definitely a good sign here. Let's see, REGI, there we go. REGI, great long-term potential, less risk associated with it, so a more prudent stock, really hot uptrend. Overall, stock's definitely favorable, up 9% here today. So yeah, renewable energy, clean energy stocks seem to be doing pretty well right now, at least for the day. Let's see. Let's find what other stocks. TQQQ. All right, TQQQ. As always, with ETFs, they don't report quarterly earnings. They don't have fundamentals or balance sheets that you can analyze. So the RV, RS are always going to be pegged at 1 with VectorVest when looking at ETFs. So the main focus is going to be the timing. 1.42, really nice strong uptrend. So yeah, it's definitely favorable right now. And why I'm getting into the next one, just as a little heads up for everybody that's tuning in here today. Next week, we're going to be taking a different approach to our Facebook sessions. We're going to be doing a more international session where we're going to be looking at the different markets that we cover here inside the mobile app, taking a look at what their color guards are saying. So if you guys are outside of the United States or have friends and family outside of the United States, make sure to remind them to be here next week. So that way we can analyze, stocks outside of the U.S. market. So if you're in Canada, Hong Kong, let's see, UK, Europe, South Africa, I believe, any other countries that you guys want to see, let me know. Make sure to be here next week as we do more of an international approach or an international look using the mobile app next week. All right, so let's see what else we got next. Let's see. I bought PLL 40. PLL. So PLL, poor long-term potential, a lot of risk associated with this stock. It's in a significant downtrend. Therefore, the stock is not favorable, Bay. When looking at it, it had poor fundamentals. You had a breakout. So from a technical basis, yeah, you had some opportunities to make a very speculative, aggressive trade here. But there's no fundamentals backing up that big move. So yeah, with that, if you bought in at 40, that's why we recommend to use stop criteria and be very careful with situations like this. And, that's why we want you to look at what type of stock it is before ever getting into it. When you look at it, if you don't consider yourself a speculative, trader, if you will, this would not be a stock you would ever get into. If you're more of a conservative or more of a swing trade, longer term approach type of investor, this would be a stock you just simply stay away from. You may have friends that are talking about it, trying to get in there, but if it doesn't meet your style of investing, simply stay away from it. That's the best tip I can give. Don't get into stuff that you're not comfortable with. All right, looking at Zoom meeting. RV, great long-term potential over the next 1 to 3 years. Safety above 1, little less risk than the average stock out there. Timing 1.69, really strong uptrend. So yeah, stock's definitely favorable. Had a pullback. Looks like it's trying to pick back up here again today. Let's see. Awesome. I appreciate that, Sam. I like hearing those comments. Premium watch list is the best. I pick stocks daily at 9:30. Buy 1,000 shares. Sell after they get to 2 to 5%. Cherry picking. Awesome. Glad to hear it, Sam. Let's see. We did TQQQ. VLDR we'll take a look at. All right, VLDR, poor long-term potential, a lot of risk associated with this stock. It's in a significant downtrend. Therefore, stock's definitely not favorable. But no earnings per share. Looks like it's a relatively new stock, or maybe they're just not reporting currently. Yeah, only been out since July. So yeah, that's why we're not seeing the earnings data yet. All right, GILD, sure, Ender. And if you guys have friends that you want, that you think would want to analyze some of their stocks, maybe they're buddies of yours at work, or just friends that you see on a regular basis, neighbors, make sure to tag them in today's post in the comment section. Let them know that we do this, so that way, maybe they can get their questions answered that they have on trading, investing, all of that. So GILD has about average long-term potential, a little bit more risk associated with it though. Timing, not there. So overall, stock's not favorable currently. Apps, APPS. So apps, great long-term potential, less risk associated with this stock. It's in a really nice, strong uptrend currently. Therefore, the stock's favorable. Taking a look, let's go to 1 year. Earnings steadily rising. And as you can see, price is following along right with that. I already pay what that list is. Oh. There you go, Sam. NIO, sure, we can take a look at. NIO, poor long-term potential. It does have a lot of risk associated with it. People are speculating that this is going to take off. Tesla was this way at the very early stages, but over time, as more consistency gets shown, you'll see those numbers improve, but it's a hot item right now. You've had a lot of talk about it in the news, and so you look at that timing, 1.91, really strong momentum currently. Therefore, it makes the stock favorable, but only if you're really a speculative trader or aggressive trader currently. CVA. Let's see. Daryl's asking how to make the app less than 15-minute delay or real time. Essentially, give our supporter call, Daryl. Ask them, they can go over it. It does require the real time desktop version you can see above me to get the real time on the mobile. Let's see. CVA, poor long-term potential, a lot of risk associated with it, but short-term, it's got a really nice, strong uptrend. So stock's favorable for you aggressive traders out there. RKT. Sorry if I got away from that a little bit ago, but somebody was asking me about RKT at $20. They bought it at $20. What is it saying? What is VectorVest saying about it right now? So RKT, you have good long-term potential. Okay. You have a lot of risk associated with it though. So this is more of an aggressive stock. RV above 1, RS below 1, aggressive. You're taking on a lot of risk to get some decent reward out of it. Timing at 0.8 though. Once you get into a stock, the timing is the most crucial part about it. Timing at 0.8 tells us this stock is moving lower overall on a short-term basis, which is not a good thing. That means the stock is losing you money, and nobody wants to buy stocks that lose money. Simple as that. So overall, the stock's not favorable right now. Taking a look at the graph, it's only been around, only started trading since August, so not a lot of data to go off of. Earnings look good, but from just more of a technical standpoint, you have lower highs, lower lows, which is not what you want to see in a stock that you're getting into. You want to see a stock hitting higher highs, higher lows. That tells us it's in an uptrend and doing what you want it to do when you get into it. And this just has the opposite look. Now, there does have some good long-term potential, yes, but wait for a technical sign to show that it's actually turning around before jumping on board, because it could just keep going lower. I've seen it happen. Aggressive stocks have a lot of risk, and that risk could catch up to you before you ever see that reward and put you so deep in a hole that when you do see the stock finally start to come back and that long-term potential finally start to show up, it may be that you're so far down on that position that, it just lessens the loss rather than getting you to where you want to be. So use stop criteria first and foremost. Let that manage the position, especially on aggressive trades like this. Follow the 50% rule, follow the 1% rule, set yourself a target, those types of things. But yeah, that would be my guidance or look or read as we can see from RKT. Let's see. Carnival Cruise, CC, or Carnival CRN. You know what? Not even going to worry about it. CCL. There we go. I knew it was CC something. All right. CCL, poor long-term potential, a lot of risk associated with it. It's in a steady decline. Overall, stock's not favorable. So, Lewis, to answer that question, no. As we've been talking about all session here today, we're looking for stocks. If you're looking for stocks that have good long-term potential you can buy for longer term, look for stocks with high RS ratings. That's the whole message of today's topic here. Because if you look at that earnings over the last year, the earnings is moving from upper left to bottom right, which is the exact opposite of what you want to see. All right, NOC has great long-term potential, less risk associated with it. However, timing's a little off. Got to be a little concerned or a little bit more cautious with it. Overall, the stock's favorable, but I'd wait to see the timing pick back up a little bit. All right, let's see. Twitter, alrighty. TWTR. Twitter, poor long-term potential. Does have a little bit more risk than the average stock out there. Timing, not great. Overall, not great. That was the easy one. Saeed. Go back, check out some of the videos that we've done on knowing when to sell, setting stops, all of that. We talk exactly about what to do to follow, or to know where you should take your profits at. So check that out. Maria's asking, today's my birthday. Happy birthday, by the way. Happy birthday, Maria. And thanks for being here on your birthday. Glad we could all join and participate and hopefully make today a better day for your birthday. Let's see. CODX. Great long-term potential, but does have a little bit more risk associated with it. Timing, nice steady short-term uptrend. So yeah, stock's favorable for now. QESX. Not finding that one there, Jerry. ABBV. ABBV, great long-term potential, less risk associated with this stock. It's in a slight uptrend currently, so yeah, the stock's favorable right now. All right, we'll look at a couple more here. What does timing mean again? So, DL, when you see timing, that means the short-term price trend. So, more of a technical indicator. It's cast on a scale of 0 to 2. So, above 1, the short-term trend is up. The closer to 2 it is, the stronger the uptrend it is. So, it's not only just telling you whether the stock's going up or going down, but also talking about, the magnitude in that move as well. Can we set stops on the app? So yeah, David, you can with the portfolios. And actually, we're going to be talking about it next week as well a little bit, where we're coming out with some new alert features. So make sure to stick around. I'm not going to talk about it too much today, but make sure to stick around for next week where we'll be introducing some of those alert features as well. Butcher's saying it's birthday too. Happy birthday. Glad you could, thanks for joining in on your birthday, celebrating it with us. So yeah, thank you guys all, and happy birthdays to everybody. S-Fix, let's take a look. S-Fix, poor long-term potential, a lot of risk associated with it. You do have speculators pushing this stock higher. Overall, stock's favorable, but if you're a speculator, you're taking advantage of it. If you're not, just simply being patient right now. All right, your favorite stock right now, Deshaun? That would be a hard question. All right, I'll show my favorite stock right now, but I'm not recommending. I just want to throw this out there. I'm not recommending anybody buy it. I'm not recommending. I'm not telling you guys what to do. I'll just show you my personal favorite that I'm looking at or I'm in right now. And that's one. It was in the list a little bit ago. So if you saw the list earlier on, you've already got a sneak peek. Or if you're in Jockey Club, you're already going to know where I'm going with this one. EXROF. Definitely a riskier trade. As you can see, poor long-term potential, a lot of risk. It's a speculative trade. Simple as that. And if you know the stock, you know that it is a speculative trade. But the timing, 1.31, nice steady uptrend. Overall, the stock's not favorable right now. This is going to be more of a longer-term speculative trade that I'm doing. But I like what the company is doing. They're automotive. They're, clean energy kind of, but in a field that has already been established with cars like Tesla, that kind of thing. This one looks pretty good. I like the long-term potential, especially when I research a stock. So yeah, this is going to be one of my personal favorites right now that I've been following. So hopefully that gives you a little insight. Also available in Canada. Yes, it is available in Canada under EXRO. Thank you for that, Mohammed. So the market is growing to drop over the last week and a half. So David, nobody can ever truly predict the market, but yes, our indicators can help you get an idea of when to expect market pullbacks and help you take advantage of pullbacks sooner rather than later. Go back to our history, our live videos. We've done a lot of them this year, especially this year on our market timing. That in itself will greatly help you avoid these kind of sell-offs and pullbacks. And also, go into the homepage or the overview page, if you will, watching the daily color guard report. That will help you keep up to date with what's going on in the market and avoid these kind of sell-offs that can give a lot of investors headaches there. All right, PLL, I thought we already did this one. Yeah, we already did PLL, so you can go back, rewatch it there. Let's see, Overstock, OSTK, and MITK. These will be the last two we'll get to today. So OSTK, Overstock, poor long-term potential, but pretty solid fundamentals. However, it's in a steady decline. That's not what you want to see. That's moving the wrong way right now. It's losing us money. So overall, stock's not favorable currently. And MITK, great long-term potential, less risk associated with this stock, really nice strong uptrend. So overall, yeah, this stock's definitely favorable here. Now, if I didn't get to analyze your stocks, I do apologize, but if you're already a subscriber, all you got to do is pull up or sign into the app, tap on the magnifying glass in the upper right, and type in your symbols that you want to analyze, and you can do the same analysis on any stock at any time wherever you're at. If you're not already a subscriber, click on the link in the description of today's video. Download it, try it out. You get 2 weeks free with the trial. And then after that, you can sign up for premium. We've got 3 different versions. We've got Vital, Essential, or Premium. Everything you see here is on the premium. Premium, as we talked about last week, definitely worth the little extra. Definitely get the most benefits out of the premium over the others. But if you don't need everything, we do have other options available for you. So, on that note, thank you all for tuning in. Once again, happy birthday to everybody who has birthday today. Thank you for joining with us here. If you haven't already hit that like button, make sure to do so. Let me know you guys enjoyed today's session. Hit that like button, hit that share button, share it with your friends, trading groups, friends, family, everybody. That way we can continue to grow these groups, continue to get more diversity in these groups, and get more insight from different styles and different investors, because everybody out there is different when it comes to investing. That's one thing I've definitely learned over the years. And so with that, thank you once again. I hope you all have a great weekend. Be safe out there. Have a good trading day today. And make sure to be here at 11 a.m. Eastern next week as we take a more international approach to our session and look at different markets all around the world, and also introduce the new alert feature that will be coming out very, very soon. So next week, you will definitely not want to miss. So once again, thank you. Happy birthday, everybody, and see you guys next week. Bye for now.